This is Nightly Business Report with Tyler Matheson and Susie Garrett. Funded in part by
TheStreet.com and Action Alerts Plus, where Jim Cramer and fellow portfolio manager Stephanie Link share their investment strategies, stock picks, and market insights. You can learn more at TheStreet.com/NBR.
Chutes and ladders. The Dow gives up a 250-point gain and ends down triple digits. What was behind the wild swings one day before the Federal Reserve wraps up its final meeting of the year? Economy in crisis. Russia's ruble routed, suffering its steepest drop in 16 years as the country's economy gets hit by both tumbling oil prices and financial sanctions. Is Russia's pain the West's gain or not? And conservative forecast. General Electric's CEO sees higher profit in the company's industrial units next year, but low crude prices could restrain overall growth. All that and more tonight on Nightly Business Report for Tuesday, December 16th. Welcome, everybody, and good evening. Susie Garrett has the night off. Well, if you like market action, then you loved today. Volatility was everywhere, in stocks, in oil, in bonds, and most especially in Russia's battered currency. Let's start with stocks, though. The Dow was off 100 points early, then up 247 midday. At one point, it jumped 155 points in 30 minutes. Then came a slow fade that quickened in the final hour. Here's what the Dow looked like in graphic form today, kind of an EKG in desperate need of a beta blocker. At the close, the Dow was off 112 points. The Nasdaq down 57. That was a drop of 1.25%. And the S&P lost 16. It is now down 4.1% for the month so far. As for oil, it was a whiplash job, too. At the day's finish, domestic West Texas crude snapped a 4-day losing streak. It ended a whopping 2 cents higher to close at 55.93, but it dipped below 54 at one point and traded above 57.2. International Brent, the global price standard, continued its slide lower, finishing at a fresh 5.5-year low, right around $60 a barrel. Well, as economic tremblers rattled around the globe, epicenter Moscow, money did pour into safe haven U.S. bonds. The 10-year Treasury, its yield landed at 2.07%, its lowest close of the year. Well, now to Russia, where so much of today's attention focused. Its energy-driven economy is a mess, to put it bluntly. Its stock market all but crashed today. One reason? The country's currency is in free fall, even though Russia's central bank raised interest rates to 17% last night, up from 10% in one day. That emergency move was intended to keep investors from selling off the ruble by offering a much more attractive interest rate. But as Michelle Caruso Cabrera explains, it still wasn't enough.
Russia is in a full-blown currency crisis, the ruble plunging over the last 2 days. Investors and Russians selling the ruble in large part due to the dramatic fall in the price of oil. Russia is one of the world's largest exporters of oil, and it's an important source of revenue for the government. Just this week, the finance ministry announced Russia's economy would fall 4.5% next year if oil stays at $60. Also causing fear among investors, Russian businesses have more than $100 billion in debt coming due next year. But because of sanctions imposed by the West, it's nearly impossible for them to refinance because Western banks are prohibited from helping them borrow money. Former ambassador to Ukraine, Carlos Pascual, says this currency crisis may be just the thing that finally backs Russian President Vladimir Putin into a corner and gets him to stop backing the Russian separatists in eastern Ukraine.
I think this is an opportunity actually to find a way out of this crisis, because the way out of the crisis for Russia is to get access to international capital markets. You can't fix it any other way.
But thus far, Russia remains defiant. Foreign Minister Sergei Lavrov denied that Russia is suffering an economic meltdown.
I can assure you that Russia would not only survive, but would come out stronger out of this. We have been in much worse situations in our history.
Like the currency, the Russian stock market is down sharply too. Longtime Russian investors say they don't think the worst is over quite yet.
There are some signs of bottom formation, but there are so many other factors at work here, like the oil price, the geopolitical situation. We need to see what Putin is going to say on Thursday when he gives a speech. Maybe he'll say positive things. That would give the market a boost.
Although Putin makes an important end-of-the-year speech later this week, Some investors say it just doesn't matter what he says because Russia isn't a safe place to invest, period.
We like places where there's some semblance of the rule of law. Russia seems to be much more the law of the ruler.
And thus far, Putin appears to be unfazed by the market's negative response. For Nightly Business Report, Michelle Caruso Cabrera.
Some of the major U.S. companies with exposure to Russia include General Motors and Ford, Pepsi, McDonald's, Citi, ExxonMobil, and Visa. Paul Christopher joins us now to talk more about what Russia's ruble collapse means for you and your money. He's Chief International Investment Strategist at Wells Fargo Advisors. Paul, welcome. Good to have you with us. In 1998, Russia had a financial crisis that almost crashed the world's economy. Is this anything like that?
Well, you've got some similar external conditions with the U.S. being the strongest and the leader in the world. You've got falling oil prices, and you've got a falling ruble and rising interest rates in Russia. A lot of concern there. But I think there's some important differences that isolate Russia much more than it was isolated in 1998. I mean, you think about it, the Russian foreign currency reserves are much larger. Russian official debt, government debt, which was the source of the trigger of the problem, is much, much lower. Russian corporations do have some debt overseas, but it's low by international standards and is really not enough to really tank or cause a big disruption for the Western financial systems. And finally, most importantly, Russia's economy is really quite isolated. Aside from one product that it sells to one part of the world, it really doesn't have a lot of trade ties with other people.
That would be energy to Western Europe you're referring to there, right,
Exactly.
Paul? So I hear you say that it's in a better position than it was 15 years ago, and so the West needn't worry quite to the extent that we did back then. But you may have heard in the prior segment a former ambassador to the Ukraine saying that the only way Russia can get out of this mess is to have access to foreign markets, foreign currency markets. Do they have that?
No, they don't have that, and I believe he's right. I think that is the way out for Russia. It's certainly the most straightforward way out for Russia, but it doesn't mean that we have to have a financial crisis that ends in default for Russia. It could be that Mr. Putin, let's say, lets the currency fall further, prints more money at home to pay wages, allows a lot of inflation to creep up, even to explode, and lets the problem and the pain be felt by the Russian people first, while he consolidates his political gains, or his military gains, into political gains in eastern Ukraine, and then once he has those regions, then he can be more open-minded about negotiating, or perhaps even his oligarch friends, the powerful elite of Russia, might pull a move like the Politburos of the past have pulled and simply remove him.
Well, let's talk about that. I mean, Putin is nothing if not unpredictable. Does a weaker Russian economy mean a more dangerous or potentially a severely crippled Putin?
I think a weaker Russian economy first the pain of the Russian economy on the Russian people, which is where the pain is mainly going to be felt, that pain has to become unsupportable for them before he has his hand forced. Or the pain has to become unsupportable for the people who really keep him in power. Those would be the oligarch types. And once that threshold gets reached, then he's in danger.
All right, Paul, thank you very much. Paul Christopher with Wells Fargo Advisors. Well, the recent slide in oil prices has had a big impact on the Dow component General Electric, which held its annual investors conference today. So could the slump in crude help or hinder the industrial giant's oil and gas businesses and its overall outlook for 2015? Mary Thompson is here with more on GE. Mary, what is the company's outlook? And I gather it was a rather conservative one today.
It was a fairly conservative outlook, but also I think it's the first time in a few years we've actually heard GE give actual numbers. The company is expecting to earn anywhere from $1.70 to $1.80 a share, and that would bracket what analysts are forecasting of $1.79. And on the call, the company's CEO, Jeff Immelt, said this did include a worst-case scenario. They don't know where oil's going, but he said it gave them some room to manage if oil prices fall
So what
further.
did he say beyond that about oil and gas?
And the reason
why is it so important to them?
Right. The reason it was so important is because its oil and gas business has really been a revenue and profit driver for GE. It's grown grown tremendously over the past couple of years. That won't be the case in 2015. Lower oil prices mean that revenue in this segment will actually decline by about 5%. That was a forecast given. Additionally, keep in mind GE has been making a lot of these bolt-on acquisitions, maybe up to $4 billion. They tend to be in the energy space. Immelt said he likes the space, but there's no need to buy anything right now.
What about the broader company? What about the integration of Alstom, the French company that's buying?
Alstom's on track. What's working right now for GE is aviation, spare parts records. Orders were high. He said transportation, locomotives are going to set a record this year as far as orders go. And also what's working, they anticipate, is that lower gas prices helping the U.S. economy. It's the economy to which GE has the greatest exposure.
You think about the evolution of this company 10 years ago. You think light bulbs. Capital, GE Capital.
Appliances.
You think NBC Universal, which it got rid of. It is now a very focused industrial company.
It's a very different company, and it remains on track to have 75% of those earnings from these industrial companies that he's focused on, 25% from GE Capital, which they say they will continue to try to shrink in an investor-friendly way. That's being its finance unit, of course.
Mary, thanks very much.
Sure.
Mary Thompson reporting. Meantime, troubling news about a French company that General Electric is in the process of acquiring. We just mentioned it. Reports say U.S. prosecutors are close to reaching a deal with that French engineering giant Alstom to pay close to $700 million to settle a foreign bribery probe. That would be the biggest settlement of its kind ever. Well, with oil prices half what they were in June, volatility returning to the stock market, worries about Russia and Europe escalating, and the Federal Reserve kicking off its final meeting of the year, what do top economists expect to hear from the central bank tomorrow and into 2015? Steve Leisman reports.
Wall Street sees the Federal Reserve reacting to lower inflation and concerns about global economic weakness, not by delaying rate hikes, but by hiking rates more slowly. Respondents to the December CNBC Fed survey still see the first rate hike coming in July 2015. That would be the first hike in 8 years. But they see the Fed hiking less and taking longer to get to the end of its cycle. 2/3 of respondents expect the Fed to remove the phrase considerable time from the policy statement tomorrow, a move the Fed has to make in order to hike rates in coming months. The Fed funds rate is now seen below 2% at the end of 2016. And Fed Chair Janet Yellen and the Federal Market Committee are now seen taking all the way until the first quarter of 2018 to get to their end point for rates, a very low 3.2%, a tenth below what the market previously thought.
Hey, how we doing?
But these forecasts for lower rates come amid rising optimism for the U.S. economy. The chance of a recession in the next year has fallen to the lowest level in the history of the survey. Growth is estimated to pick up in 2015, all the way to 3%. From 2.4% this year. And lower oil prices should add more to that growth while reducing inflation. The outlook for inflation looks to be the real driver for a gentler Fed. That and European economic weakness, which is now seen as the biggest threat to the U.S. economy. Although there's good agreement on the path for Fed policy, markets will be listening closely to Fed Chair Janet Yellen at her press conference tomorrow for any hint that plunging oil prices and global economic weakness could alter the Fed's course. For Nightly Business Report, I'm Steve Leisman.
And William Lee joins us now to talk more about what we may hear from the Fed tomorrow and into 2015. He's head of North American economics at Citi. Mr. Lee, welcome. Good to have you with us. You heard Steve's report there. Do you side with the general consensus that suggests that interest rates, when they start to move up, will move up slower and less steeply than maybe we might have thought 3 months or 4 months or 5 months ago?
Absolutely, because one of the things that you've emphasized in your report in all the reports is that we have more uncertainty now. And what's the optimal decision rule under uncertainty? You do less and you do it later. So unlike your consensus, I think the Fed will actually start a little bit later, probably December of this year. But I absolutely agree that whatever they do, it'll be a lot less than they would have done before, because the key is they need to figure out what's going on. And right now, we're getting a positive jolt from oil, but there's a lot of downside risk to the economy as well.
You anticipated my next question. What does oil mean to the Fed today?
What it means is that for at least 2015 and possibly a little bit into 2016, the consumers are going to be a lot better off. They're going to have more income to spend, and we're going to expect a lot stronger economy. but maybe on the order of extra 3/4 percentage point, maybe as far as a whole percentage point, 1.5 percentage points. Those are the upper bounds of most estimates as to how much oil will help the economy. But also you have to remember, it's a temporary help. If oil prices stabilize at, say, 65 or 60 or even 40, right, we will only get whatever benefit we have as the oil price declines. Once it stays there, that's the end of the boost to growth, and what we have then is a return to potential growth.
You know, Bill, economics, they may call it the dismal science, but I got to tell you, it isn't anything but uninteresting. When you think back to how we started this year with the 10-year yield at 3%, and most people forecasting that it would stay there or maybe edge higher, we're going to end the year at roughly 2%. How much did that surprise you, and what do you think you might be surprised by next year?
I think that was a great surprise to everybody because we were all anticipating a more robust recovery. Instead, we got a kind of meandering 2.5%, 3% type recovery. What we're anticipating also is that the rest of the world is going to matter more for the U.S. than ever before. The size of the traded sector in the U.S. has grown in the last 5 years from 15 or 20% of GDP to over almost 30% of GDP. That means we're much more vulnerable to the rest of the world. And that's the lesson learned. Going into next year, I anticipate more surprises, both from abroad as well as within the economy.
All right, that's interesting. Bill, let's bring it home to stock investors. As we look tomorrow at the Fed and the possibility of rising interest rates next year, are we past the point where equity investors are going to worry so much about whether and when and by how much the Fed raises interest rates, and if we move to something different?
I think equity investors have always been interested in profits. Where are the profits coming from? If we have a robust recovery and we start to have some positive price increases, because after all, what are profits but it's the markup over costs? If we can mark up over costs and raise prices, that's going to be a good picture for the equity markets.
All right, Bill, thank you very much. Bill Lee with Citi tonight. Welcome. Thank you so much for your help. Still ahead, just when it looked like things couldn't get much worse for Sony, they did. That story next. There has been a surge in sign-ups for health insurance plans under the Affordable Care Act this year. More than 1 million Americans picked a plan in just the past week, bringing the total of enrollees to nearly 2.5 million this season. That according to the Obama administration. And that number is just for the federal healthcare.gov marketplace. 13 states have their own websites and marketplaces. Well, Apple is making some headlines. First, it is halting online sales in Russia because of the extreme fluctuations in the value of that country's currency, the ruble. The company apologized to consumers over there, saying it needs to review its prices now that the ruble has lost half its value. Also a victory for Apple in a decade-old billion-dollar class action lawsuit over its pricing of the iPod music player. A California jury decided Apple did not use restrictive software in the iPod to freeze out makers of competing MP3 players from accessing the iTunes marketplace. Well, a different mood at Sony Pictures, where the fallout from that massive hack attack on the company's computer system just keeps getting worse. Julia Borston has more on the latest troubles at the studio.
The group that claims responsibility for hacking Sony's systems and releasing personal emails and information is now going as far as to threaten theaters and theatergoers over Sony's The Interview, threatening unspecified but ominous actions on the film's premiere, which is scheduled for New York on Thursday, and the film's release scheduled for Christmas Day.
We're now in a completely different level. They have complained, they have brought Sony's internal network to a halt, they have released one trove of data after another. They have released unreleased movies. They've leaked them to file sharing sites. Now we actually have an implied threat of violence.
We have to keep in mind this threat comes from a group determined to prevent the movie from being released and people from seeing it. Sources tell CNBC there's no credible intelligence to indicate there is an active plot against U.S. theaters. Landmark Theaters, whose Sunshine Cinema is hosting the Thursday premiere, has told the LA Times they're moving ahead as planned. The FBI issuing a statement saying, quote, the FBI is aware of recent threats and continues to work collaboratively with our partners to investigate the Sony attack. This latest threat comes along with reports of a new data dump of emails from studio chairman and CEO Michael Linton.
Who knows what's in Michael Linton's email? The hackers have promised to release more, so there's only more data yet to be released. Who knows what's in it?
It also comes as Sony's hit by the first lawsuit about the hacks, a class action suit filed against Sony on behalf of current and former employees, alleging the studio is negligent, failing to secure its computer systems, quote, despite weaknesses that it has known about for years, and that it, quote, failed to timely protect confidential information of current and former employees from law-breaking hackers. Sony did not immediately respond to requests for comment about the suit or the threats. We're also awaiting our request for comment from AMC and Regal theater chains. I'm Julia Borston for Nightly Business Report in Los Angeles.
A Dow component raises its quarterly dividend, and that is where we begin tonight's market focus. The diversified industrial giant 3M lifted its shareholder dividend 20% and said it expects sales to rise from 3 to 6% at the high end in 2015, depending on foreign exchange rates. Shares of 3M up 1.5% today. It closed at $159.05. Not to be outdone, CVS Health also raised its shareholder dividend 27%, announced a new $10 billion stock buyback plan, and raised its 2015 earnings forecast, indicating growth now of as much as 16% over 2014. That was just what the doctors seemed to order. Shares of the drugstore chain rose nearly 3% today. It finished at $92.31. It's not the call that Sprint wanted to get. Various reports say the FCC is preparing to fine the telecom giant $105 million for billing customers for unwanted services. Sprint says it doesn't comment on rumors or speculation, but investors sure commented. They sent shares 6% lower. Sprint closed the day at just $3.81. After the bell, earnings from Darden Restaurants, the parent company of the Olive Garden, Longhorn Steakhouse, and other eateries. In its first report since it spun off Red Lobster, Darden posted better than forecast profit and a 5% jump in sales last quarter. This even though it did lose nearly $33 million. Shares initially rose in after-hours trading, but they closed the regular session 2% lower at $55.91. And after the closing bell today, American Apparel officially terminated the controversial company founder and CEO Dov Charney. He was suspended in June amid allegations of willful misconduct and past harassment claims. Paula Schneider, a former exec at Warnaco, has already been named the company's first female CEO. And coming up, from houses to works of art, the eye-catching price tags of some of the most expensive things bought this year. And file this story under They Paid How Much? With 2014 coming to a close, we took a look at some of the outrageous prices some of the wealthiest people in the world paid for massive homes, one-of-a-kind artwork, exclusive cars, and other over-the-top items in 2014. Robert Frank has our story.
Record wealth in 2014 meant record prices for the stuff that the wealthy buy. Starting with real estate, the most expensive home sold in 2014 was this 18-acre estate in East Hampton that wasn't even on the market. It sold for $147 million to hedge funder Barry Rosenstein of Jana Partners. The most expensive real estate listing was this 53,000 square foot house in Beverly Hills called Palazzo d'Amore. Listed for $195 million, it's got 23 bathrooms, a 15,000 square foot entertainment complex, and the wine cellar holds 3,000 bottles. The most expensive work of art sold this year was Chariot, the sculpture by Giacometti that was sold by Sotheby's last month to Steve Cohen for just over $100 million. We also broke a record for the most expensive car ever sold at auction. This 1962 Ferrari 250 GTO was sold by Bonhams in Pebble Beach for $38.1 million. But some experts are warning that the car boom may be about to stall.
No one wants to be made a fool of, and I think we just might be seeing a little bit of a collective inhale, maybe people taking a little bit of a break and waiting to see where this market goes.
And the famed 1-cent magenta was once again the most expensive stamp ever sold at $9.5 million. And the Henry Graves Super Complication by Patek Philippe sold for $24 million. For proof that the cupcake trend has reached its ridiculous apex, we had the $900 cupcake. It was sold by a Toronto bakery made with Normandy butter, Jamaican Blue Mountain coffee, cream flavored with Select Krug champagne, and 24-karat gold flakes. 2014 was good to the rich, and it may end up being just a warm-up for spending of the wealthy in 2015. For Nightly Business Report, I'm Robert Frank.
No comment. Finally tonight, if you plan on hitting the roads or taking to the skies over the Christmas and New Year's weekends, expect to have a lot of company. AAA is out with its holiday travel forecast, as it always is at this time of the year. It predicts that a record 99 million Americans will travel at least 50 miles from home over the holidays. Most of them will be on the Jersey Turnpike, I promise. Thanks to growing consumer confidence, lower gas prices, and a lot of people taking the Fridays after both holidays off. And that, folks, is Nightly Business Report for tonight. I'm Tyler Matheson. Thanks so much for watching. Have a great evening, and we'll hope to see you right back here tomorrow night.
Nightly Business Report has been funded in part by
TheStreet.com and Action Alerts Plus, where Jim Cramer and fellow portfolio manager Stephanie Link share their investment strategies, stock picks, and market insights. You can learn more at TheStreet.com/NBR.
I'm Tyler Matheson with a Nightly Business Report news brief. More volatility in the price of oil, a crisis in Russia's economy, and the kickoff to the Federal Reserve's final policy meeting of the year led to a whipsaw of a day on Wall Street. The Dow began the day sharply lower, shot up nearly 250 points after that before ending down 112 in a last hour sell-off. NASDAQ down 57, S&P off 16. Oil ended 2 cents a barrel higher. The group that claims to have hacked Sony Pictures' computer system is now threatening theaters that show the controversial film The Interview. The White House says 2.5 million Americans have now signed up for an insurance plan for 2015 on its healthcare.gov website. AAA says a record 99 million people will travel over the holidays, helped by low gas prices. And tune in to Nightly Business Report here on your public television station.